Thank you. It's genuinely a pleasure to be here with you today, so I'm very happy to be here. And after lunch, I hope you all are well-fed, maybe feeling a little bit sleepy. And I have the best topic to bring you at the edges of your seats and to really think about, where we're going with digital financial services. Regulation. Nothing more exciting than regulation, right? So we're going to look in particular at regulation as it relates to innovation. We heard a couple times regulation come up today. Over-regulation as being a challenge was mentioned. The Crown Prince mentioned the importance of smart regulation. We'll hopefully focus a little bit on the latter. Just to give you an idea of what we'll be speaking about, first we'll take a look at sort of a macro approach and think about what it is that we really want regulation to do in the context of financial services, and furthermore in the context of financial inclusion. Then we'll look at a few specific proactive regulation or regulatory approaches, I would say, particularly those that have been really increasing in popularity or increasing in growth recently. Then we'll look at a few specific examples of how those have been implemented, and then we'll wrap up. So starting with more of the macro approach and just thinking through what is it that we want regulation to do, we often hear enabling regulatory environment, which is a bit of a jargony sort of buzz phrase, but what is it that means? And I think the best way to really think it through is if we start with our goal. So our goal is to really have efficient, resilient, and equitable global financial system, and furthermore, one that then really promotes long-term economic growth and social development. In this context, if we think about financial inclusion in particular, maybe what's most related to this then is the equitable piece. So we've heard a few statistics today, and if you think about, where do we really want to go? Have we met our goal? And we aren't quite there yet, right? We know that we have 1.7 billion unbanked, and I think the underbanked number is somewhere around 3 billion, let's say, but give or take quite a few. And we have seen that we have made progress. If you think about the 2011 Fintech report, 2.5 billion unbanked, we're definitely getting there, but we still have a long way to go. And the last mile is often, of course, the most difficult. So thinking through, let me go back. There we go. So thinking through some of the regulator considerations, I already mentioned a few of these. The first three: stability, financial integrity, consumer protection. These are some of your standard regulator considerations. I've added in here efficiency and inclusion. Obviously, we need the financial system to be quite efficient, and then a big piece of this is then the inclusion piece. Related to inclusion, if we look at where we've really seen increased regulation or regulation scrutiny maybe over the last decade, it's particularly on the digital financial services side. This is where innovation is coming in. This is where you've seen very cost-effective ways of reaching the unbanked and the underbanked, and we're continuing to see progress in this area. So with the focus on digital financial services then, I have a few quiz questions for you. In case regulation is not exciting enough, we have something a little bit interactive here. So thinking about the importance of regulation in digital financial services, we're going to look at just how important one aspect of this is, mobile money. So the mobile money industry is currently processing around A, 22 million US dollars per day, 215 million US dollars per day, 1.3 billion, or 1.1 trillion. Go ahead, just guess. I think I've heard everything but A, so that's good. We're at least in the right direction. C is the correct answer, 1.3 billion, right? And this is from the GSMA State of the Industry report, so very, very recent. Great. Now we're going to talk about one specific maybe approach to regulation, one that has really been growing recently and developing. And this is on the regulatory sandbox. So this is a way of looking at how you can move innovation at the same speed as regulation, or having a little bit of back and forth between the two. Many of you may be familiar with this, but I think it's worth really just looking over the definition quickly. It's a framework set up by a financial sector regulator to allow small-scale live testing of innovations by private firms in a controlled environment under the regulator's supervision. And of course, there are special exemptions, a time frame that's usually associated with this as well. Great. So breaking this down, what are some of the benefits that we see in these regulatory sandboxes? One, can be a very proactive approach that supports innovation. It's live testing in a safe environment, so it's something that you can do live and really iterate on. This one I think is particularly important. Targeting specific objectives or areas of focus. We've seen really an increase in thematic sandboxes, so really focusing on one objective or another. For example, you could be creating a sandbox particularly for digital financial services that are serving women or serving individuals in rural populations that have been previously underserved or unserved. We're really just opening it up to saying financial inclusion in particular is our main goal. Let's build a sandbox around digital financial services for those unbanked. We also have opportunities for ongoing feedback and refinement. One of the main sort of criteria for success for sandboxes is that feedback loop between industry and between regulators that keeps going to help support innovation and regulation at the same time. And then can accommodate incumbents and new fintechs. I think often we think about new regulation as really, or sandboxes as really benefiting just the new fintechs, but it's something that can also be for incumbent banks that are really looking to innovate as well. And then lastly, if this is done well and we're being efficient and thoughtful about it, we'll be increasing competition for the benefit of the end consumer. Good. So now some of the challenges. There are always challenges to looking at new approaches. One, you might be able to think that this is all of the sand that you have to play with. Your really opportunities are limitless. But sandboxes are resource dependent, and often they can require quite a bit of human power. So thinking about what bandwidth you, your team, your department has, realistically, you might end up with a sandbox that looks like this. And you have to think, how do you design that sandbox then to still function and really achieve the goals that you're looking for? So building feedback loops, I mentioned this as a really important criteria for success, but it's not exactly easy to do, and it can also be quite time-consuming, and you need to have planning, flexibility for things when things aren't working well. You need to adjust a little bit. Consulting the industry before and during. It's not the case that you want to build a sandbox and then afterwards bring in the industry. Before, when you're really thinking about creating the sandbox, making sure that the industry is a part of those conversations. And I say industry, but we're really talking multiple industries here. And then avoiding preferential treatment. I mentioned before that this can be for incumbent banks as well as new fintechs, startup companies. I think making sure that you're being inclusive and thoughtful about that. And then no one-size-fits-all solution. Building a sandbox, it's not like you have a wonderful checklist. You just go through and you go through the steps. It's much more of a, depending upon your goals, you want to shift and adjust. So this can, again, be a little bit of a resource constraint. Building equitable application processes. Anytime you're having certain entities apply to be part of the sandbox, you have to be very cautious that you're being equitable and careful with the application process. And then this is just one tool among many. You don't necessarily need to have a sandbox to be encouraging innovation, but it's one way that you can do that. So going beyond sandboxes, thinking, what's just important in general, whether you're using this approach or another one. Some of these are quite common when you're thinking of financial inclusion and regulation. So I won't go through all of them, but I do think it's important to maybe highlight a couple here. One in particular that we see at the World Economic Forum is the importance of the one on the far right here, solutions at the local, national, and regional levels. So if you're thinking about a national approach or a local approach, and how do you really support those that are unbanked or underbanked, think about how this new regulation or these new policies are going to really connect with others in your region or at the global level. We know that cross-border digital payments is a great way, and it's a great piece of financial inclusion. Access to global markets, very important here. So how is this going to, what you're doing, really going to be able to connect with others that are working on similar projects or programs regionally or globally? Then the other one is, we've heard quite a bit today about the importance of public-private partnerships. I can't emphasize that enough. And then also private-private partnerships, and we've heard a little bit of that. I think we heard something in particular from MasterCard on the importance of that and some of the work they're doing. That is equally important. So, quiz question number 2. Thinking about this sort of push towards digital, and thinking about regulation in different types of environments or similar environments, what do Sweden and the US state of Wisconsin have in common? A number of citizens have voluntarily been microchipped and now pay for goods and services with their hand. B, unions began campaigning for cash-free workplaces after several high-profile robberies. C, both are nearly cashless. Or D, both have large, robust regulatory sandboxes for fintech development. I heard a few right answers. It's actually A. And while, I mean, for me, I just think this is a little bit ludicrous, but people are enjoying it. Believe it or not, the numbers are going up. There is no current regulation in place in either Sweden or the US for this technology, because it just seems that the numbers aren't quite big enough to really warrant the attention right now, but it is something that is being thought about. So in Sweden, I think it's around maybe 4,000 people that have done this, which is a very large number to me. And in Wisconsin, it's, I think, less than 100. It's maybe 50 or something like that. But apparently, they're very happy with it. And the numbers are growing rather than having their chip taken out. Great. So a few examples then around regulatory approaches. Looking back at the sandboxes again, just a quick history here. The first sandbox was really just in 2015, the first formal one, and this was the UK, followed quickly by Singapore. The objective here to really be encouraging innovation. And then we have a couple of interesting examples. Hong Kong, I think what's interesting here is that it really started out for banks in particular, and banks that wanted to innovate. And then they got a lot of feedback from fintechs that also wanted to be invited and be part of the sandbox. So they expanded it in 2017. Sierra Leone, the opposite happened. And they started out in 2017, particularly with startups, new fintechs. The incumbent banks wanted to be a part of it, so they developed another track, and you have 2 tracks there. We have other efforts here, and these aren't necessarily regulatory approaches, but these are moves toward digital, certain initiatives that have taken place, and they have taken place without formal sandboxes. So something to think, we often think of M-Pesa as sort of the big success story of mobile money, right? And this took place without it. So again, just to reiterate that sandboxes are not the one and only way to really approach innovation and regulation at the same time. Speaking of this then, I really wanted to highlight one example that I think is quite a good one. Brazil's Banco Voyager has Voyager, this ship, and it goes up and down the Amazon. And it's essentially an ATM on a boat, so a floating bank branch. And this is particularly servicing people then that would have no means to travel to a bank branch otherwise. And this has been going on for a number of years now, has been extremely successful. In fact, they have increased the number of ships that they have going up the Amazon. So I think this is another way that, again, it didn't start out with necessarily a sandbox, but it's a way that regulation, they had to think about regulation and the regulatory environment in order to be able to do this. So a couple of final thoughts then. One, just that, again, to reiterate that flexibility and creativity don't need to reside outside of financial services. I think financial services gets sort of a bad rap for being heavily regulated, maybe a little bit boring. Regulation certainly does, but it's not necessarily the case by any means. And then public-private cooperation, again, being essential to closing the financial inclusion gap. And with that, we have one final question here. And this is really related to public-private cooperation and the need for that around something in particular, which is public transportation fares and paying for this digitally. So which of the following is not a contactless smart card used to pay for public transportation fares? A, the octopus card, B, the opal card, C, the oyster card, or D, the ostrich card? Which one does not belong? D, very good, excellent, the ostrich card. So maybe it'll be something that'll come out in South Africa or something. But at the moment, octopus card, Hong Kong, opal card would be Greater Sydney area, and then the oyster card, of course, London. Great, thank you very much.